Happy Wednesday, everybody. Happy hump day. Sorry for the delayed report, but the Shavuot holiday was for the past few days. So let's catch up on last week and even for the first few days of this week. Today is June 4th, 2025, and this is your Wednesday market update. We had a shortened but action-packed stretch of trading days last week after the markets were closed for Memorial Day, with markets bouncing back between optimism and uncertainty, much of it driven by evolving trade news, a resilient labor market, and hints of economic softening. Let's take it day by day. The markets opened the week with a bang after a rough close ahead of the Memorial Day weekend. Investors came back Tuesday to a wave of optimism. The trigger, of course, President Trump's decision to delay the implementation of 50% tariffs on the EU imports until July 9. That delay, combined with upbeat comments from the European trade negotiators, that did help to ease immediate fears of a trade war escalation. Meanwhile, economic data helped to reinforce the positive tone. Durable goods orders did fall less than expected, and the consumer confidence index came in well ahead of forecasts. Again, surprise, surprise. Inflation expectations also eased a bit, with one-year outlooks dropping. Add in a strong two-year Treasury auction and stabilizing global bond yields, and you had a solid risk-on tone throughout the day. The Dow up 1.75%, S&P up 2%, and NASDAQ up about 2.5%. After Tuesday's surge, Wednesday brought a dose of reality. Stocks gave back some gains as traders reevaluated the risks of ongoing trade disputes. Early optimism, helped by comments from China's vice premier about wanting deeper financial ties with the U.S., they faded quickly. The May FOMC minutes released mid-afternoon did disappoint those hoping for a dovish pivot. The Fed made it clear they're in a wait-and-see mode, juggling fears of slower growth with inflation concerns stemming from tariffs. Just to stir the pot, headlines surfaced late in the session that the Trump administration had halted sales of certain U.S. semiconductors to China, a blow to chip makers just ahead of NVIDIA's earnings report that knocked markets into the red to close out the session. All three indices down about 0.5%. Markets opened higher on Thursday after the U.S. Court of International Trade ruled against the administration's use of emergency powers to impose tariffs, prompting a knee-jerk rally as investors celebrated the potential removal of all those duties. And NVIDIA also posted strong earnings, further supporting tech at the open, but the optimism didn't last. President Trump quickly appealed the court decision, raising concerns that trade uncertainty would drag on for months now. Stocks slid through the morning but stabilized in the afternoon. While we finished well off the session highs, the day still ended in the green. The Dow up 0.25%, S&P up 0.5%, and the NASDAQ up about 0.25%. Friday's session saw plenty of movement, but ultimately not much change. Initial volatility came from the mixed economic data. Q1 GDP was revised up slightly, but consumer spending was revised lower. Jobless claims also came in higher than expected, with continuing claims hitting a multi-year high. The market meandered until late day news broke Trump would soon speak with China's President Xi to hopefully work it out on trade. That was enough to spark a squeeze into the close. For the day, the Dow was up 0.25%, S&P flat on the day, and the NASDAQ down 0.5%. For the month of May, the Dow was up almost 4%, S&P up almost 6.25%. That's the best May since 1990. The NASDAQ up 9.5%. So much for sell in May and go away. We'll just have to see. Monday brought in June, and markets began the month on uncertain footing. Over the weekend, Trump doubled tariffs on steel imports to 50%, escalating tensions with the EU and Canada. At the same time, geopolitical fears flared as Ukraine launched drone attacks deep into Russian territory. Despite those headwinds, markets found support from weak ISM manufacturing data, which hinted to a potential rate cuts later in the year. The report missed expectations, but traders took comfort in the idea that soft data might prompt Fed action. Again, we're hearing a lot of that, but I don't know that it's going to work out. Later in the day, rumors of an upcoming Trump-Xi phone call helped to reverse early losses. Stocks closed near session highs, the Dow flat on the day, S&P up 0.5%, and the NASDAQ up 0.75%. Tech led the rally yesterday as chip makers drove momentum. The rebound was fueled in part by improving optimism on trade talks. White House sources indicated that best effort proposals were requested from trading partners by midweek. Economic data was light, but the anticipation of today's ISM services and Friday's job reports is keeping investors on edge. The manufacturing sector remains soft, but as long as the consumer holds up, markets seem willing to look past near-term noise. The Dow was up 0.5%, S&P up 0.75%, the NASDAQ up 1%. That was just for the day. As we move into midweek already, seems like the Fed head parade has not had much effect. But we've already seen a bunch of them this week, and today we'll get Bostic and Cook, and the next few days will bring Kugler, Harker, and Schmid. Everyone is still hearing the wait and see. I keep saying, in my opinion, while the market is reacting to rate cut hopes, all of the oxygen in the room is still being taken up by 1600 Pennsylvania Avenue and tariffs. Just a few earnings this week, but they will begin in earnest again soon, so that will be another focus, but tariffs are still number one on the hit parade. It's the first week of the month, so watch for labor data. Today, ADP, tomorrow, jobless claims and continuing claims, and then the non-farm payrolls on Friday, just another input for the economy. Looking ahead, this week's focus shifts to services data and Friday's all important jobs report, as I just mentioned, with equity valuations stretched. Any signs of an economic slowdown, especially on the consumer or the jobs front, like we saw today, could shake markets. On the flip side, if employment and services data hold up, it gives bulls room to keep pressing higher. Tariffs remain the wild card. While recent legal decisions offered some temporary hope, the back and forth on trade policy continues to weigh on long-term visibility. The taco trade, that's Trump always chickens out. That has worked so far, but markets are becoming more cautious. We're seeing a market walking a tightrope, celebrating any reprieve from tariffs, leaning on tech for leadership, and hoping that softening data doesn't become a real slowdown. The next few days are going to offer critical clues to all of that. Stay tuned. We're going to be watching the data and the headlines closely. Just a few more days until the Friday planning video is out, so keep an eye out for that. As always, keep your goals in mind. Markets are going to bounce around. Your goals will not, nor shall your actions. Stay in touch. Have a good rest of the week.